Next week's going to be a short week, but a big one in trading. It's going to be a huge one. Hey traders, my name is Blake Morrow, and you are listening to the week ahead video for the end of August, I guess, September 1st, 2025. Anyway, we're on the heels of a long weekend in the U.S., so trading is going to be a little benign come Monday, especially if you're trading in currencies. If you're trading equities, futures are going to be open, but things are going to be kind of quiet. Obviously, the rest of the world's going to be trading, but liquidity is going to be down. But next week, when Tuesday comes around and we kick off the markets, there's so much happening. We obviously have the jobs report at the very end of the week, but we have ISM, both services and manufacturing. We have ADP, we have JOLTS data, and did I say we have Canadian jobs too? Yeah, we do, and European and Swiss inflation. So a lot happening next week, and a lot of the future of the markets really hinge on the data that's coming out this next week. So we're going to dig into that today. And I don't have to go through the whole calendar because you guys can do that. You can just follow along on ForexAnalytix. You can follow along on your own calendar and select which dates and whatnot. But I am going to talk about some individual currencies. I'm going to talk about equities because we came off of all-time highs today at the very end of this is the end of the month trading. I'm filming right now on a Friday, so it's like end of month flows are hitting the market, but it doesn't mean the market is negative. And have you seen gold? Gold is nearing all-time highs. We're gonna and Bitcoin is doing the opposite of gold, which I think is very interesting. So we're going to talk about all that and more on the week ahead video. So let's just go ahead and get into it. And let's start talking about, I'm going to take it off Bitcoin really quick here. I want to talk about what's happening in the euro, because the euro just spiked above the 117 level. Oops, I got the wrong charts. Let me go over. By the way, if you guys, if you follow me on the daily charts or on the daily shows rather, this is the week ahead, or the morning edge charts. These are the charts that I use even when I'm updating analysis in the euro during the day. You can see these are the same charts you're going to see here, but I have an exclusive subset of charts for the week ahead video, so you guys can kind of see, every single week when I'm drawing on these charts, you can understand. We follow everything from week to week. I don't touch these charts until I see you again today or on the weekends. So anyway, we're going to talk a little bit about the euro. If you want intraday updated analysis, just go to ForexAnalytix. If you go to any of the daily charts on basic technical analysis, you're going to find my charts. These are the ones that I'm posting every day and doing the end of day analysis, so you guys can kind of get an understanding of how I view the markets on a day-by-day basis. But if you're only here on the week ahead videos, well, then you're seeing what you see. So we talked about last week about the euro possibly moving to 118. It didn't. And matter of fact, we've been in a very tight trading range since the Jackson Hole Symposium. I mean, I thought the Jackson Hole Symposium might get us out of this really tight range that you see here, but no, we're still in this very tight range. But all hinges on this week, as we have not only the jobs report, but all the U.S. economic data that we're going to have. Like I said, the ISM data, the JOLTS, the ADP, the weekly unemployment claims. All of that's really going to factor into the markets here. And what you'll notice is it's the last day of the month. The euro's actually kind of bid up here. We traded back above 117 very briefly, but you'll notice, and I'm going to zoom this out just a little bit, or focus in here. You'll see that I meant to stop that. There we go. You'll see that the euro is approaching this descending trend line. So if we can get above the 1730 level, maybe that's going to open the door for higher levels. I still think that the euro is a sell rally type of situation, but I'm going to talk more about that when we discuss the trade setups, which, every single week I give you the top 3 trades of the week and I review last week's for, accountability reasons. So you guys can see what I've talked about the previous week and, how I felt about it and what had happened. what I said and then what actually transpired. It's important, right? All right, so on every single one we talk about. So anyway, the euro, like I said, I think the euro's sideways, but it's going to break out of this range. It's going to break out of this malaise come next week. I think next week's going to be a deciding week on whether we see dollar strength or dollar weakness, because it's going to set the pace for what the Fed does this month on rates. Right now, interest rate expectations, just so you guys can see, and go over to ForexAnalytix right over here. You can see that interest rate expectations for this next month, and it's pulling up, slowly. There we go. Jeez, don't know why it took so long. So we're looking at a cut for the Fed in September, and there's an 88% chance. Now that percentage that you see here is going to change quite dramatically. Probably over the course of the next. It's going to change over the course of the next week. Obviously with a stronger number, if we have stronger data, what's going to happen is that the likely probability of having an 88% cut is probably going to get cut to like 40 or 50 if we have some strong data that comes in next week. So we're going to be watching next week's data very, very carefully. So that was the euro. I do want to cover a couple of other things, obviously, in the currency market. I want to talk about what's happening in the US dollar Japanese yen. That's always, not always. It is also sideways. You can see we're in a very tight trading range. Keep looking for dips to be buying the dollar yen. That hasn't transpired this week. It's dipped, but it just didn't dip down to the 145.80 that I was really hoping for. But one of the ones that's really on my radar right now is the dollar Canadian. The dollar Canadian, we were looking for dips and actually did start to find some buyers this week as we dip below here. But notice, and I'm going to take this off really quick, and I'm going to actually remove a few things. I'm going to clean up these charts for you, so just give me 1 second to do so. Let's clean that up. Let's clean up this flag pattern. This was Jackson Hole that created that selling. But notice how weak the dollar Canadian has been since. All right. Now, if you pull this out a little bit further, right, and you pull this previous triangle out a little bit further, it's going to give us some further support levels that we need to focus on. But check this out. If you go from this high, this low to this high, and let's put it on our fibs. 1 second to do so. What you're going to notice is we're closing in on the 618 retracement, which, when you think about like positioning, right? And you can see how the dollar Canadian's trading weak today. Well, if it breaks lower through these lows, through this 137.20 level, there's a good chance that we could hit just 137.10 and give us what a lot of people like to call, myself included, is you see, here, let's delete that. I don't know why I just did that accidentally. You get what we call like a false breakdown. So if we push below those lows right close to a 618, there's a good chance that we can bounce from there. Remember, we came out of a triangle, so I could see buyers seeping in somewhere around these levels as well. One of the other things I wanted to talk to you guys about, even though there's no economic data, this is regarding currencies. Don't worry, I'm going to get to equities, and we're going to have Nick from Trading Analytix talking about the Mag 7 and some of the key stocks a little bit later. But I do want to talk about the Aussie. Now, here's the reason why, and we've had a pretty big conversation in our chat room around this, and I'm going to go over to the daily chart, and I'm going to zoom us all the way out. You guys can see we go all the way out to the 2013 level right there. See that? Take a descending trend line, come all the way through those. You guys can see this here. Okay, I'm going to draw this for you real quick. Touches are important in the market. So you got that high, that high, that high, right? Oops, I meant to draw that a little bit bigger. But you see how we had a false breakout that led to the breakdown. Then we hit it again and rejected, right? Just a couple months back. And here we are on a weekly basis. We're closing in on that resistance. It comes in around 65.80. That is going to be a level that I think is a very pivotal level in the Aussie dollar. Now, one of the things one of the scariest things about the Aussie dollar at this point in time is, it's rallying this week, but look at overall and how it's performed with risk. Now, when I say with risk, let's put it up to the S&P really fast. Okay. See, you've seen the Aussie dollar really break away from this correlation back in 2023, and you can see the rally that we've seen in equities. Then we saw a sell-off in Aussie. Equities continued higher. Then we had that sell-off during the Liberation Day sell-off. That created a really massive, nasty move down in the Aussie. Stocks go to all-time highs. Aussie's been struggling up at these levels. So with that being said, you got to keep a real close eye on the Aussie, because if we are truly near a top in equities, which you guys know, I believe we are, which I'll talk about more as we go through this video. If I think we're at a top in equities and they start to roll over, what do you think is going to happen to the Aussie? You know, if S&Ps start to roll over, whether it's this week or next week, what do you think is going to happen to the Aussie here? Well, I think it's going to come under some selling pressure as well. So keep your eye on the Aussie dollar as we approach that 65.80 level. We're only less than 50 pips away. Actually, at the time of recording, you can see the current price is 65.44. I'm talking about 65.80, which is 35 pips away from where we're currently at. So, guys, really, really big levels are coming up in the Aussie dollar. I'm going to see how it reacts as early as next week, especially due to what's happening with risk appetite, risk aversion. All right, now, as you all know, it's a shortened trading week, well, for a lot of us, but liquidity wise, really, Tuesday, Wednesday, Thursday, Friday, those are going to be bazonker days. Bazonker, yeah, I made up the word. It's going to be crazy, crazy, crazy days. So how do you take advantage of that volatility? Well, you do it with the trader funding program. So this weekend is the last weekend till September 1st at 7:59 p.m. Eastern. Not 8, it's 7:59. I misspoke last week or sometime this week. It's 7:59 p.m. Eastern. There's a 30% off the trader funding program. So if you want to get funded as a trader to take advantage of the volatility that's coming this next week, take advantage of it. You can take either the one-step assessment, which is the more economical approach, or you can get instant funding. So if you want to learn how to get funded as a trader, all you have to do is go to ForexAnalytix.com, click right over here to getting funded, and it'll take you over to the trader funding program. Now I want you to watch this real quick 2.5-minute video. It's going to explain the sale in full. There's been no better time to get funded as a trader than this weekend at the Trader Funding Program. Now, why do traders want to get funding? Well, because they want to take advantage of volatility and they don't want to risk their own money. Those are the two predominant reasons. But this weekend is the best weekend to do it because of our sale. Now, before I tell you about our sale, let me tell you have two different options. The first option is you can get instant funding. That means you can access up to $100,000 in capital today. You have to follow some risk parameters. You can't lose more than 8% of your high water mark. So as you're making money, you can't lose more than 8%. You can't lose more than 5% intraday. But you also get to keep 90%, up to 90% of your returns. That's pretty awesome. Your second option is a more affordable option. You'd have to take an assessment. It's a one-step assessment. No crazy rules, just you have to make 10% without losing more than 6% of your high water mark. So as you're making money, as you're trying to make your 10%, you can't lose more than 6%. Now you can't lose more than 5% intraday, just so we know you can control your risk. But once you pass the assessment, you then get into a live environment following the same rules, but you can keep up to 90% of your returns. That's pretty awesome. You know what else is awesome? Is in the one-step assessment or instant funding, you will have access to the ForexAnalytix community and chat rooms with myself and other ForexAnalytix analysts inside the chat rooms as well. How great is that? You have analysis on 30 different products, not all currencies. You have the S&P, Ethereum, Bitcoin, bonds, boons, you name it. But also you have risk management tools. You have a live squawk feed. Like I said, you have chat rooms where you can access me probably 12, 14 hours a day. Being able to see what trades that I'm doing. Plus you have trade ideas, not just from me, other analysts, but other traders as well. Plus the ForexAnalytix system will also give you trading ideas along the way. So now This weekend, the sale is our Labor Day sale. It's from August 25th to September 1st at 8 p.m. Eastern. Let me say that again. August 25th to September 1st, 8 p.m. Eastern. You get 30% off if you want instant funding or one-step assessments. Your choice, 30% off for a few days only. Because after the Labor Day weekend, volatility is going to be rising. All the traders are coming back from holiday, and it's going to be a lot of volatility, and that's going to give you opportunities to take advantage of. So take advantage of this sale. Put in discount code ESCAPE-WORK. I'll say it again, ESCAPE-WORK, because it's our Labor Day holiday. So make sure you take advantage of this sale this weekend, and I'll see you in the chat rooms. Like I said, that sale, it's only until September 1st at 7:59 p.m. Eastern. Take advantage of it because these sales don't come around very often. For those, there's a lot of traders that are specifically waiting around for this sale. So take advantage of it this week. So now you have a lot of great opportunities with volatility, and you have opportunities to, to take advantage of having a larger amount of capital to be trading in the markets. Okay. I do want to cover a couple of different markets before I bring in Nick. First and foremost, I do want to talk about the S&P. We've talked a lot about it in recent weeks, and let me remove this off here. And you guys know I've been waiting for Wave 5 to complete, and I've been waiting for us to get up to 65.40 right here. And it's really 65.25, 65.50, depending on what contract you're looking at. But somewhere up there, I've been expecting us to find some selling interest. We're getting really darn close. In a low volatility environment, I mean, I know there's some selling that came in today with that divergent relative strength. You can see it's divergent. We had some selling that came in today. It's end of month, but really come Tuesday, Wednesday, we could actually see a rally back up towards those highs. So the S&P, we're getting real close to completing what I've been looking at, and you guys all know this, so I'm just going to make sure you guys can see it. Once again, you have, since the 2022 lows, you have 1, 2, 3, 4, and then this is wave 5, completing somewhere up in this neighborhood. So I am looking for, these levels to really find some sellers. All right. Also wanted to talk about gold. I mean, gold has been nonstop crazy. I mean, one of the things about gold, this is a weekly chart, so you can take a step back and kind of view it from this point of view. Look, gold is consolidating a massive run. Usually when you're consolidating at all-time highs, right? When you're consolidating up at all-time highs, that's not a bearish thing. That's a very bullish thing. So given the fact that we're right up against, I think resistance should, at this point in time, should allow us for a continuation higher. So where that would take us, my assumption is you take the previous all-time high, and then the lowest low before we start making higher highs, or higher lows, excuse me. So that upside resistance comes in around 3650 all the way up to 3800 basically. So if you're looking at gold, it's very, very, very little pullbacks at this point in time. So gold continuously looks bullish. On the flip side is you have Bitcoin. Now I'm going to show you guys this. We were talking about this over the last couple of weeks here. You'll notice that Bitcoin just stopped at the 127% extension of its low before it hit an all-time high. So that is the 127% extension that stopped us there. Now, if we continue lower, that's going to take us down towards the 104.50. Then you notice that the 200 DMA comes in around 101,000. Those all seem like viable options for crypto that is not bouncing. The bounces are shallow in Bitcoin, which does suggest further downside in Bitcoin, and therefore probably a lot of other crypto names as well. One of the other things that I wanted to talk about is crude oil. Crude is consolidating, and we talked about this, I believe we talked about this last week, about us hitting the $65 level. Well, it did. Maybe this was 2 weeks ago when I talked about it. We hit that $65 level and reversed. I still think this is really big resistance. Now, if you don't know why it's such big resistance, let me clarify some things for you. All right, let me just show you this really fast, and we're going to zoom in. Okay, there we go. And now if you take the last high and before we hit a fresh low, where's that level come in? At 65 bucks. It comes in at the 38% retracement. You'll see it right here at $65. So while we remain below, let me grab this over here. While we remain below 65 bucks, you still have to focus to crude on the downside. I made a video with Chris Weston from Pepperstone. We do the trade-off show. I think we were on our 183rd episode this week, 183rd or 184th, and I was talking about on the show, and you guys should find that show because it's a well-produced show, like CNBC type of quality, and we were talking about it's a weekly show. We were talking about how crude oil should trade back below 60 because President Trump expects crude to drop below 60. Now, as I pointed out during the show, Donald Trump doesn't get everything he wants, but he is pretty damn good at making things happen in the markets when he says it. And I think most of you are aware of that. So be cognizant of the fact that the Trump administration is still looking for crude oil to dip below 60. So I believe while it's below $65, the risk is still to the downside. Now, like I said, I'm gonna let Nick from Trading Analytix talk about some of the major markets, also some individual names. I'm sure he's going to cover NVIDIA since NVIDIA earnings were on Wednesday night, which I haven't looked at NVIDIA today actually, but NVIDIA is probably given up a little bit of its recent gains, but still very bullish. But he's going to talk about a lot of individual names plus some individual markets. So make sure you stick around for Nick from Trading Analytix, and I'll see you in a few minutes.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you as always for passing on over to me. And we're going to go and kick off and start talking about the equity market. So we're seeing a little bit of a pullback today in the NASDAQ, down 1 1/4. I feel like people might be getting excited as if this could be, the start to something. So that's really going to be the conversation that we're about to have. When you take a look at the NASDAQ, this isn't a perfect head and shoulders pattern because it did break the neckline at some point, but I do feel as if that 23,000 level is going to be very crucial. And what you'll also note is that we did fall and bounce right near that 786. I had this outlined throughout the week as somewhere I would think about getting short. So with that, it's now pulled back slightly, and the question is, can this begin to try and actually break down? And this would forecast a breakdown actually right near NFP. And NFP this upcoming week is going to be so crucial as far as projecting what the Fed's going to be doing later in the month of September. So I want to talk about why the Fed is, considering cutting rates now. It's been this whole tug of war this past year on why Fed Powell has not cut rates. And what he noted during Jackson Hole was that the NFP revisions were not all so great. And let's take a look at those revisions right now, because I think this is really starting to weigh on the Fed. We had one of the worst revisions since COVID, and then before then in 2008. So the Fed is in a rock and a hard place between inflation concerns and potentially a bad job market. So I would actually say if the data comes in good next week, there is potential for this to break down because people will feel like, okay, well, maybe we're going to be more data dependent. If you end up getting a higher tick in CPI as well, that could also kind of staple this in for a fall correction. Now, obviously, the inverse can happen. If the data comes in weak, I would imagine people will begin to price in a 50 basis point cut maybe, or at least just start forecasting more cuts than before, and the market could take off. So these levels here, the 786 and the NASDAQ, is going to be very crucial to see if it holds. One of my concerns, if you're a bear, is seeing the Dow right now. The Dow finally got its head near all-time highs and broke out, and seemingly is holding, that previous all-time high. So while it remains above here, I would say it's structurally still pretty bullish. You know, low, high, lower high, higher high, seemingly looking okay. And the same thing in the SPY. The SPY looks okay as well. Are we down, 0.65%? Yes, but I would say that, until we get back below 641 or so in SPY, taking a look at S&P, you're looking probably somewhere near 6,400, a break of there, then we can start to consider some of the short positions potentially. When you take a look at big tech, you have Tesla down 2.8% today after tagging channel resistance. We'll be noting if it begins to break around 310, that would be a solid development, but this also doesn't look too terrible yet. But I think it's developing, weakness. NVIDIA, I wish NVIDIA was doing a bit more. I'm watching this level here around 172, but really the break of 170 would be more concrete to suggest we might pull back. I'm simply looking for a back test of all-time highs near 150 in NVIDIA in the event it does break. One thing I would like to talk about is we need to be keeping a close eye on these big tech stocks because they account for so much of this market. When you take a look at the Mag 7s, yes, it has, stalled and it's potentially going to break channel support. Look for a break in the mags of 60. This will tell you if we're going to get a deeper correction, I believe, because this AI sector is so important. You should be watching this mags chart, and I would also be watching the semiconductor index SMH. It also broke out towards all-time highs. And then, if it can get back below 280, I would say that's a very key level that should tell you something. I would cue that up and watch if that breaks. If it doesn't, this market can continue to blast higher. I was just taking a look at open interest, and it looks like it's closer in the SPX towards 65.50. So I think there's still room to run, but if the tech sector begins to break down, that'll be a problem. I am noticing some rotation when you take a look at where smart money has been going. This is out of Goldman. You're looking at healthcare, industrials, materials, energy. So there could be some slight rotation. Maybe the fall offers us a pullback, but I do want to remind everyone when you're near this close towards all-time highs in a very bullish sector, sometimes it pays to see if it goes a little bit higher before you start to have those grandiose ideas. All right, I'm going to go ahead and pass it on back to Blake. Thank you all so much. If you're looking for more of this, please give us a follow at Trading Analytix. Have a great holiday. Cheers.
Thanks, Nick. I appreciate your updates. Now, I know he's filming. He films the same time I film, so I don't get to watch his section until after everything's produced, so I'll get to watch it over the weekend as well. But if you like what Nick had to say, make sure you give him a thumbs up. Matter of fact, if you like these videos and you think they're instrumental to you, getting a trading plan put together, a cohesive plan each and every week, give us a thumbs up. Subscribe to the channel. It's free to subscribe to the channel. It's free to comment below. Like, if I miss something, like you're like, oh, Blake, but you forgot to talk about the Swiss CPI, jump down in the comments. I try to read all the comments and get back to you when you comment. So please do that. That's free to do. And it's free to subscribe, and it's free to give me a thumbs up. And same with the team. All right. So this is the point of the video that I am going to talk about the 3 trade setups from last week. And then I'm going to give you my top 3 plus a bonus trade setup for this week. So the first setup would be from last week. Number 1, sell the euro dollar above 118. Well, as you can see, the euro dollar did not make it above 118 this week. Matter of fact, we're still stuck in that range. I thought this was going to be the week that drives us out of the range, but it's going to end up being next week. Why is it going to be next week? It's because everybody's focused on the jobs data, and everybody's coming back from holiday. So I think that's this week that's going to pop us out of there. So I was looking to sell the euro at 118. It never got to 118. So the first trade setup just didn't happen. You make plans. You plan your trade and trade your plan. We planned our trade. We couldn't trade our plan because the market didn't move where I thought. So first setup, it's not that it didn't work, it just didn't happen. Second trade setup, which I think is going to be a theme this week. Second trade setup, long US dollar, Japanese yen on a dip to 145.80. Yeah, I was looking for a move down there last week. Same thing. We didn't do it. Now, we did dip and then bounce. I mean, we dipped from 46.50, but I was really looking for a dip down to 145.80. So trade setup number 2, again, we planned our trade. It just didn't come to fruition. So 2 trade setups, it's not that they didn't work. They just didn't come into fruition. All right. Trade setup number 3. Trade setup number 3 is short the S&P at 65.40 for wave 5. Well, what's the high we got to this week? The high we got this week was 65.06. So unfortunately, 34 points away from that target. So trade setup number 3, unfortunately, didn't come to fruition either. Now, that's pretty rare. If you listen to these trade setups, you know that's just simply not the case every week. But we are in the last week of summer, quote unquote, for most traders. So ranges stayed tight. I thought they were going to expand a little bit. They didn't. So be it. Now, if you don't think I traded this week, you crazy, man. You crazy. You know, one of the things about being involved with ForexAnalytix is you're in this trades room, or excuse me, in this chat room. Like you can come in here and see analysis from different traders, what people are looking at, what charts our analysts are looking at, what other people are doing, what we're talking about. You can have side conversations with us. You can go over to the trades room and know exactly what I'm trading. Like, Blake, you know, you closed out of all of your dollar trades right here and you're still long the Euro Swiss at this level. Yeah, you can have all that information in the chat room. That's why you should be taking advantage of the sale that we have going on right now. Now, it is summer, right? For at least a few more days. Our summer sale is 40% off our monthly subscription. Now, that means we took our prices down to 2019 levels. But once you lock yourself in to these prices, you are grandfathered in. So take advantage of that sale.
Online.
Get involved in the ForexAnalytix community. Come chat with me in the trades room. See what I'm doing. You can ask me questions like most traders do. They ask, "Hey Blake, how are you navigating through?" I was having a conversation with Steven last night. He said, Steven jumped in and said, "Hey, followed you on that one, looking good." And we were joking around about something else. But look, we can talk about how I'm trading the market. You don't have to trade the way that I'm trading. I never expect anybody to. But if you wanted to say, "Hey Blake, why are you long the euro and I'm short the euro?" And I'll tell you the reasons why I'm long. And you can say, oh, that makes sense. And you can say, that makes sense, I don't agree. Or that makes sense, and maybe I'm going to get out of my trade. Whatever. But the fact of the matter is you have access to not just myself, so many great traders in our community that are constantly posting what they're buying, what they're selling, why they're buying, what they're selling, having conversations about the markets, posting charts, posting their analysis on why they feel a certain way about the markets. So get involved in a community. Be involved in the ForexAnalytix community. And there's no better time than right now, because when that offer is gone, it's gone. All right. Now, this is the time that I'm going to give you the top 3 trade setups of the week, plus a bonus. And remember, I'll come back next week and we'll cover them and see what had happened. So this week, trade setup number 1. Sell the euro dollar at 119.50. Now you say, well, Blake, last week you were thinking about selling it at 118. Why are you going to sell at 119.50? Because if the dollar breaks down, I'm actually now looking for a move, and you can see it right here, for the euro dollar to break out to the upside and trade up to the 127% extension. So at that 127% extension, I am looking for a reversal. So I'm looking to get short at 119.50 if we see it next week. Now, does that mean it's going to happen? No, I mean, look at this week. I was waiting for all sorts of stuff and it didn't happen. But if we see 119.50, I personally am going to be a seller of the euro up there. And why? There's another reason why. Because it's a big frickin' Gartley pattern. If you don't know this, then you have to take a longer term view of the euro and do that. You'll notice there's 161% extension, 88% retracement, and that would be a long-term triangle resistance for the euro, which I think is going to have huge resistance ahead of 120, and maybe we'll see it as early as next week. Wouldn't that be something? Trade setup number 2, short the S&P. Now, I am still looking at that 65.40 level, but I'm also going to give it a little bit more room just in case we overshoot. So I am looking to sell the S&P from 65.40 to 6,600. So anywhere up to, oops, I went a little too far there. Anywhere up in this area, I'm looking to sell the S&P. So let's zoom in. There we go. And what? This is a mess. There we go. So if we make it up to that 6,600 level or 65.40, somewhere up there, I am going to be looking for a short in the S&P to complete wave 5. So that was trade setup number 2. Trade setup number 3 is long the euro kiwi. Okay, now this is a big one, guys. I'm going to have to put it. Oh, there we are. I'm looking to get long the euro New Zealand on a move to the 197 level. So 197 happens to be right here. Right? Okay. Also, just so you know, let's do this. Actually, let's do this. That's what I was looking at. There we go. It's a 50% retracement of the last move higher. You'll notice that this is really key resistance, but I also want to point out that, and I'm looking to get long because I'm looking for a longer term breakout of the Euro New Zealand to break out eventually to do one of these, to move up above 210. So I'm looking to buy dips and for an eventual breakout above those highs. So that's trade setup number 3. The fourth and bonus trade setup is, I am looking to short the Aussie dollar up at this trend line, somewhere around the 66 cent level. So somewhere up right through here, because we can overshoot that trend line. Don't think the trend line is going to stop us on a dime. Somewhere up here, I am looking to short the Aussie dollar. So, somewhere up around the 66 cent level, I am looking to sell the Aussie dollar next week. So guys, gals, if you think that this week ahead video was really good in preparing you for next week, giving you some trade ideas, some actionable ideas, thumbs up, subscribe to the channel, give me a comment. And if you're having a nice long weekend somewhere else or spending it with family and friends, I hope you enjoy it and have a safe one. And like I always say, thank you so much for spending your time with me. I know this is your personal time over the weekend. And it just means the world to me that you would spend it with me. So thank you so much. I hope you have a safe weekend, and I'll catch you on Tuesday morning on the F.A.C.E show. I will not be there on Monday, nor will anybody else. Those shows are canceled because it is Labor Day weekend. Anyway, have a great weekend, and I will catch you on Tuesday. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.